Have you ever looked at two similar homes in Arizona and wondered, why are the property taxes so different? Same area, similar size home, similar price point, but one tax bill looks totally different than the other. Well, there's reason for that, and it usually comes down to two numbers most homeowners don't fully understand. You've got the full cash value, which is also called the FCV, and the limited property value, also called the LPV. If you're buying, selling, renovating, or trying to understand your property tax bill in Arizona, this matters a lot because the number you see online is not always the number your taxes are based on. And if you're buying a home from someone who's owned it for a long time, your future tax bill may not look like theirs. Let's talk about this in plain English. Today, I want to explain something that confuses a lot of Arizona homeowners and buyers, the difference between full cash value and limited property value. I know this is not the most glamorous real estate topic, but it can absolutely affect your monthly payment, your expectation, your budget, and your decision when buying or selling a home. And honestly, most people don't understand it until they get a break in their tax bill. So let's make it simple. Full cash value, or FCV, is basically the assessor's estimate of what your property is worth. Think of it as the value most connected to the market value. It's not the same as a Zillow estimate or a Redfin estimate, and it may not be exactly what your home would sell for today, but it is closer to the idea of market value than the number your taxes are actually based on. One thing to understand is that FCV usually runs behind the current market. If the current market moved quickly, your full cash value may not match what buyers are paying right now. It's one piece of information. Helpful? Sure. Full story? Nope. So let's talk about limited property value, or LPV. This is the number that Arizona actually uses for property taxes. And this is where people get confused. Arizona's limited property value was designed to help protect homeowners from huge tax spikes when home values quickly rise. After Prop 117, beginning in tax year 2015, Arizona moved to using LPV as the taxable value for property taxes. An LPV growth is usually capped at 5% per year in the standard calculation. Even if your market value jumps fast, your LPV may rise much more slowly. That's the protection piece. So let's use simple numbers. Say in year one, your home's market value is about 400 grand, and your LPV is 300 grand. Then the next year, the market jumps. Now the home's value is closer to 480. That's a 20% jump. Your LPV may only go from 300,000 to 315,000, and that's a 5% increase. Your taxes are based on LPV, not the full market value. So in this example, taxes are based on 315 grand and not 480,000. There are other reasons that two homes can look very similar online but have very different tax histories. One owner may have lived there for years, and their LPV may have been slowly increasing over time. Another home may have had a reset event, improvements, or different valuation situation. This is where buyers really need to listen. When you look at the listing online, you may see the current owner's property tax history, but that's not going to show you where their taxes have stayed or what will happen when you buy it. But that doesn't always mean that your taxes will stay the same after you buy it. If the sellers owned the home for a long time, their limited property value may be much lower than the current market value. And that's great for them. But after a sale, the property may be reviewed differently and the future tax bill could change. If you're budgeting based on only the seller's current tax bill, you might be surprised. And that's why I always want buyers to understand the difference between what the current owner pays and what a new owner might pay. This is not about scaring anyone. It's just about setting expectations. Because when you buy a home, you're not just buying the purchase price, you're buying the monthly payment, and property taxes are a part of that payment. It also explains why two homes in the same neighborhood may have different property taxes. A buyer might say, no, wait, this home is the same size as the one down the street. Why are the taxes so different? Here's a few other possible reasons. The previous owner may have owned the home much longer, which that was the example I've already talked about. One property may have had major improvements. One may have had new construction added. Another could have had a change that caused the LPV to be recalculated. Talk about that in a sec. And another one, the owner could have just challenged the taxes, while one neighbor did and the other neighbor didn't. But before you assume something is wrong, look at the FCV and the LPV and the property history. This is why reviewing tax history in the MLS matters. Now, not just the amount, the story behind the amount. Now let's talk about the part a lot of people miss. LPV doesn't always just move slowly forever. Certain changes can cause it to be recalculated under a different rule. This can happen with a few things I've mentioned, like new construction, changes to the property, and major changes that affect the property status. The Arizona Department of Revenue explains that there are different LPV calculation methods, commonly referred to as Rule A and Rule B, depending on whether the property is unchanged. If nothing major changes, the LPV is usually controlled. But if something significant changes, the value may be treated differently. So let's talk about renovations. This comes up a lot. People ask, if I remodeled my kitchen, will my taxes go up? Well, maybe. Depends on the type of improvement, how it's been reported, and how the assessor treats it, and whether it triggers the reassessment situation. A small cosmetic update is different from adding square footage or building a major addition, just building a major addition. Now, if you're just adding square footage that is less than 14% of the original size of the home, probably not going to be reassessed. Over 15, it's automatic, at least right now. This is the kind of thing I would absolutely want a homeowner to verify directly with the county assessor or a qualified property tax professional before making permanent decisions. But the general point is this: major improvements can affect assessed value. And before you do a big project, especially if you're making additions or some structural changes, check to see how it could affect your tax situation. And don't guess, a 5-minute call to the assessor's office will save you a lot of frustration later. There are also special property tax programs that some people may qualify for. For example, some veterans with disabilities may qualify for property tax exemptions or reductions, depending on their disability status, income, and other requirements. Surviving spouses may also qualify in certain situations. Senior homeowners may also have options, including programs that can freeze the limited property value for a period of time if they qualify and continuously reapply. The important thing is this: don't assume you qualify and don't assume that you don't. Check with your county assessor. In Maricopa County, the assessor's website has the property information and resources available for both homeowners and it is public. It's a great place to start. Now, one bigger picture question people ask: whether property taxes can be handled in a more fair or maybe a simpler way. The current system is honestly pretty funky. You've got the assessed value, the PCV, the LPV, tax rate, you've got exemptions, and most people just want to know, what am I actually going to pay when I own a house? A more fair system, well, or simpler one, would probably be needed so that it was more predictable for people on fixed incomes, or somebody's buying a home and they needed to know how much property taxes are going to be. All I can say is, I'm sorry, it's not a simple conversation, but it is definitely a conversation worth having. So for now, the best thing homeowners and buyers can do is to understand the system we have, because once you understand the FCV and the LPV, the tax bill starts to make a lot more sense. So let's recap this simply. Full cash value, more connected to the fair market. Limited property value is what Arizona uses to calculate property taxes. Under Prop 117, LPV was generally limited in how much it can increase each year for the same owners. Taxes are based on LPV, not a Zillow estimate, nor Redfin, and not necessarily the price you paid. A sale, new construction, or major improvements can create a different tax situation. A new buyer may pay different taxes than the previous owner, and special programs may help veterans, surviving spouses, and seniors who qualify. Now that's the big picture. If you're buying or selling in Chandler, Gilbert, or anywhere in the East Valley, don't just look at the tax amount on the listing and assume that's the whole story. Send me the property address and I'll help you understand what you're looking at. And that this is not to scare you, not to overwhelm you, just to help you make clear decisions before you buy or sell. I'm Nancy Wittenberg with Coldwell Banker Realty, your dedicated home advocate. And if this helped, subscribe for more real estate tips that actually explain the stuff most people don't talk about until it's too late. Thanks for watching.